Last week, I made British online fashion retailer Asos one of my largest investments. The stock is up 70% over the past 12 months, and I'm kicking myself I didn't snap up more shares when the stock plummeted back in March during the start of the coronavirus. The stock has risen 500% since then, and despite this rapid rise, I do think Asos is one of the best companies to gain direct exposure to the e-commerce boom, and here are 5 reasons why. Hey everybody, my name's Connor and welcome to my channel Trading Places. My aim is to help you take advantage of the stock market so your money can work for you so you don't have to. In this video, I'm going to point out 5 reasons why I believe Asos is one of the best growth stocks out there. First of all then, the e-commerce sector in general is booming, with online sales now accounting for 1/5 of total sales in the UK. And despite this year being an anomaly, that figure is expected to keep growing given the increasing number of e-commerce users as a new generation of younger shoppers come of age. Asos very much focuses on the 18 to 30 category, and their popularity with this age group is ideal given that younger shoppers are the most likely to spend big on fashion. The second thing I like about Asos are the fundamentals of the stock. I've got a portfolio of growth stocks that I keep an eye on, and of the 25 companies in that list, Asos has the best price to sales ratio. However, it is worth noting that they are growing revenue slower than most on that list. However, it is one of the few stocks on there with accelerating revenue growth. If you're still doubting that Asos is a growth stock, then take a look at its earnings growth, which rose over 300% this year. The earnings growth gives Asos one of the strongest free cash flows of any growth stock out there, and makes my third reason for loving the stock possible. Reason number 3 then is their recent acquisition of Arcadia Brands. The pandemic has destroyed many high street retailers, and Asos has taken advantage by snapping up some of the UK's most popular high street brands, including Topshop, Topman, Miss Selfridge, Burton and others. These brands recorded sales of almost $1 billion in 2019, yet Asos was able to knock out their high street competition for £265 million. And not only that, but Asos's profits are expected to jump 20% thanks to their newly purchased infrastructure. Leading on quite nicely then is my 4th reason for loading up on shares of Asos, and that's because of their international growth. Up until the pandemic, the company's revenue growth in the UK was stalling as the company committed to focusing on international expansion. However, over the past 6 years, Asos has quadrupled its revenue from outside of the UK, and this growth should continue thanks to the purchase of Topshop and Topman, which both have a good presence in the US, with partnerships with large international retailers like Nordstrom and Ukes. My 5th reason, and I put it last for a reason, is because I'm not sure how important it really is, but there has been some really positive coverage of the stock lately from analysts. Despite a huge run, analysts do continue to increase their earnings estimates and have announced price targets as high as $7,400, representing almost 30% upside for Asos from here. Before I wrap up, I do want to point out that the stock isn't a slam dunk. Asos may have less competition on the high street, however, online competitor Boohoo continues to grow their revenue faster than Asos. However, the latter's ability to outbid Boohoo for Arcadia was a big win, and that should keep Asos out in front. Secondly, it's possible that when the high streets begin to open up, we'll hear a lot of good news from physical retailers about their sales, and this could cause a mini rotation out of the stay-at-home stocks, and that includes Asos. If this does cause a pullback in the share price, I imagine this would only be temporary given the long-term narrative, and Asos does present an opportunity to be one of the leaders in the e-commerce market. Before you go, please show some love. Give me 1 second of your time, click the like button and subscribe. It really helps motivate me to keep producing these videos for everyone. So subscribe and stay tuned for my upcoming videos on top gene editing, gaming and AI stocks. But in the meantime, remember that your money should be working for you and not the other way around.